We're in terrible shape on the intermediate term trend, but we're getting back toward some oversold conditions, which could augur well for a bounce. So really, like, the answer to your question depends on what somebody is playing for. If somebody is in the market for a 2 or 3 day scalp and they want to buy a stock that's, down 30%, they think it'll bounce 8%, and they think they can time that, they should do that. I don't think that's what most people want to do or can do or should do. So let's talk about what the situation is for most people. Today is the 100th day that the S&P 500 has been below its 200-day moving average. That hasn't happened since, you have to go back to the financial crisis. So this is the only one that didn't V and didn't get us back to those new highs and stayed in dip or stayed in correction. And for the NASDAQ, it's the same story. And you have to ask yourself, well, what has really changed? And the big picture that's really changed is that you had a Fed put for a very long time that made buying dips easy. And now things have gotten a lot more challenging because that put is gone. And not only is the put gone, but the Fed deliberately, they're not going to hold a press conference and say this. They're not going to buy banner ads on Yahoo Finance announcing this. The Fed wants the stock market down. It wants wage growth to slow down or even possibly go negative. It wants home prices down. It wants the supply of capital, funding, everything from IPOs to LBOs to fade away. And once those financial conditions have tightened sufficiently, the data on inflation will start to go the Fed's way and not a moment before. And if you don't understand that or you refuse to accept that, then you're fully invested from January, and you're eating everything this market has to throw at you.
Some don't believe that they're going to have the wherewithal to go through with it, that they'll have the nerve to do everything that they say. You're right that that's what they say.
I'm so glad you said that.
But there are some people who say, show me, right? Show me, like Mohammed El-Arian, show me.
Yeah, so what's the alternative? What's the alternative then? That the Fed flip-flops? How much worse would that be for investor sentiment, honestly? Like, how much worse would it be to say, you know what, we give up, we're just going to let inflation do what it's going to do and run its course, and it'll come down naturally, which is something we've been hearing people say now for months, which is silly. So I don't think that the Fed has a choice other than to follow through on what it's saying, because the alternative is so much worse. And it prolongs the inevitable. So, look, I'm not in the camp that says the Fed has to do this extreme tightening. I just think that if your whole game plan is like, I want to be in it for when the Fed says, they're good and there's some sort of a pivot, there could be a lot of pain between now and then. I think that's really the major point. One other thing, and let's all try to understand the history here. And Powell understands the history very well. In the early 1980s, the last time we were fighting an inflation spike like this, you have to understand that they were calculating inflation differently. Housing was a much, much larger component in the inflation data and the methodology that they used. That has not been the case since. But if you were to normalize those same inflation metrics from the early 80s and use housing the way that it used to be used, real inflation right now would not be 9.1%. It would be greater than 10, maybe close to 12. Ask yourself, what did the Fed do to fight that at that time? Well, the Fed went to like 20% Fed funds rate. So I don't think anyone's considering doing that. And now it's even harder, actually, for them to try to do something that drastic. Because back then, debt to GDP was something like 30% or 35%, and now it's over 100%. So they have that constraint. If they try to jack rates up to a level that would really kill off inflation immediately, the government wouldn't be able to fund itself.